Good day. This is the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, August the 3rd, 2024. I am going to start with the larger overview, and that will begin with the cash market on my 3-year weekly chart. And what we got going on, let's see, I've got stuff showing up. You can't see it, but it drives me crazy. And we'll just stick it down there for right now, and hopefully that'll just take care of it. I'm looking at that the market remains on the biggest picture. So again, I'm on the 5-year weekly chart. It's the primary degree fifth wave. And that suggests, as marked, that the primary fourth wave completed in October of 2022, which remains, for all intents and purposes, a major low. So that's a level that continues to provide long-term support that this rally will continue to just normally correct, but continue to move higher as in its following manner on an Elliott wave basis. So what inside of a primary fifth wave are going to be 5 waves of intermediate degree, of which we've only completed 1 and 2. So we're still inside intermediate wave 3. It's going to consist of 5 waves of minor degree if we have 1, 2, and we just finished 3. So we're in a minor wave 4 correction, which will yield to a minor fifth wave rally. But so we're still inside this fourth wave, but moving out, we're not done yet. So moving out in a minor fifth wave up, we'll go higher to a new all-time high to complete intermediate wave 3, which then will come back down in an intermediate fourth wave. And then once that's complete, rise again in an intermediate fifth wave. So we have 2 strong rallies to new highs yet to come. So let's start keeping inside where we are, which is actually part of a correction. And so we're looking for that to continue. Now, bringing this down to the daily chart. So in the daily chart, we start to see the box. And this is the box where, as Elliott taught us, that the fourth wave will normally find its terminus, its endpoint, within the price territory of the fourth wave of 1 lesser degree. We're in a minor, 1 lesser is minute, that's this right here, thus that box. So, but it will more than likely find its endpoint together with the endpoint of this one. Now, that doesn't mean it has to. It can come up above or it can go down below. Both can happen. It's a fourth wave, but that would be the general place where we start to look for support to complete and then the next move to begin. Now, within that, on the daily, that's the part that starts to go like, we have not on the cash basis started to overlap into this box, which is going to give a lot more strength and it's going to continue. But let me tell you what is giving strength that I do feel this all will continue. So off of that daily, I'm going to come down to the hourly, and that is looking at the gaps. So we've had 1, 2 on the way down, 1, 2 on the way up, both within corrections. So what does that kind of suggest? To be honest with you, what continues to happen in terms of flows, and that's the money flows, the option flows, etc. They produce these stronger moves in both directions. It just depends on what they're breaking in terms of a volatility trigger. And does that volatility trigger actually, does it kick in or does it fail? And we're seeing those on the gaps lower. Though what happens is the volatility trigger gets triggered, which would suggest, and we get, to go and reversing positions in terms of putting more risk on versus risk off. And the risk on is for an up move. So we get that, and then it gaps when they realize, oops, bad deal. And what happens, it gaps back through one of the flows, the money flow, the options flow, the gamma flow, all of that, one of them starts to really start to break down and starts breaking levels. And when it happens in a gap, which it did here and here, well, the market has to react. And if SPX traders, and all of the components, they react because the whole, well, first of all, the market is going down, but we're breaking triggers, and the reaction or the adjustment that needs to be made is traders need to sell. So it's usually because of what type of position gets put there. It might be short puts, and short puts, as it gets broken, and those short puts get into the money and deeper into the money, well, that makes you, if you're the trader and you're short the put, it makes you longer as it's dropping. So you're losing strong amounts of money. And the gap, of course, aggravates it, pushing the necessity to adjust even harder. So that button gets pushed even harder. And maybe they just have to continue to sell. So that's why we get those gaps, and what can aggravate the gap and push it along further. Elliott wise, it fits. Now here in the cash market, I'm just looking at how do I want to count this? I'm on the hourly chart. To be honest with you, 1, 2, 1, 2. So here we have 1 of C, 2 of C, 1 of 3 of C, 2 of 3 of C. What does that suggest? Well, that we're going to return to going down and likely may gap again. If not, we'll finish this early on Monday morning and turn again. That's what 1, 2, 1, 2 would suggest. Or we get the finish of a wave 2 in the futures market tomorrow when Globex opens, and then just turn on Monday. We gap in the cash market, which again will be triggering a lot of levels across the board. So I'm keeping an eye out for that. We have plenty of catalysts, actually, so we can continue to factor in abysmal earnings reports, things, particularly in Intel, which I'll get into in a minute, but just different numbers that are going to come out, the economic data that they all want to say is just really horrible. Oh, how that's going to affect the Fed. That's going to be the discussion, along with politics, along with the geopolitical situation that is brewing and promises to accelerate between Iran and Israel. Now, again, I'm not going to go into detail about that, but understand that if it does kind of blow up there a little bit, it's going to pull in other countries, and it's going to become likely a world war. That's the definition if you really look at it. Of course, not looking for that, but again, the market will react. In my opinion, the market will react, and it could just react to the downside because we're already getting what's going to be perceived as negative. So the whole move's perceived as negative. So it just gets pushed along. Now, keeping a clear head so that one can trade, that's a different story. Understanding what's creating it, I think, can allow us to, instead of focusing on bullish and bearish and what position I may have on, you get to change a position. You get to make adjustments to your position. The market's doing so. Why wouldn't you? I'm going to leave it right there. Back to just how I'm going to count this. I'm telling you, either it's going to be 1, 2, or we've got a 1, 2, maybe a 3 and a 4, and we still got a 5 to do to finish the first 5, to finish wave 1. Again, I'm thinking in terms of where this market can come in. Let me go back out to where do I have my markers? I don't. I need my wave 4 markers. For there, it's right in here, but I can go out one more, and I got to put those back on because essentially it's from here. So let's get that back out there. It's going to be helpful. I don't know why I ended up taking them off. Okay, so then just bear with me. I apologize, but I want to make sure that I've got these on here because they're important. And these are this color because it's the minor. So let me just get that up there. And there you have it. 618, I'm actually not looking for that deep. So one more adjustment. Nope, not that. Oh, come on. Yes. All right, eventually it's going to work for me. Wow, it's just not going to tell me I can do that. There you go. 618 gone. I appreciate that you are letting me do this. All right, so here we have for minor, we have 236, which it's yet to come into, right? We just talked about that. The future, the cash market has not broken into the box, but I'm looking for it to get down to the bottom, and look where the 382 is, down at that bottom, 49.58, and the low is actually 49.53, which is the April expiration low. And we really did kind of give a V-like bottom down there. We got the grand announcement that the market was extremely oversold, and interest rates, et cetera, et cetera, et cetera. And it just kind of flew from there. That was April of 2024. So I'm just looking to get back to that low, and then we rally again. So, and I'm thinking that we may do it during the August cycle. So, and that's February, April, August. So it fits. It fits. Excuse me, February, May, August. And so we're looking at possibilities there. And we could come down and bottom again in that August, which is 2 weeks away. That's kind of my point. I want to leave it right there. I'm not saying that that's what's going to happen, but when we're looking at the whole scheme of things, what could drive it down to the levels that could complete it? What's going on right now? All right, so back down to here, we're going to go back down. I'm going to take a look at the hourly chart, and right now I'm looking 1, 2, 1, 2. Comparing now with our moving averages on the hourly. Actually, I'll start on the daily and then come down. On the daily, our moving averages are that the 200 is getting flat right below a level which could just finish wave 3. Again, 1, 2, 1, 2. Is it unrealistic to think a third wave can bring us down from where we currently are? 100, 120, 125 points. We were down pretty heavily on Friday. We were down 122. We do it again. We're here. We're sitting right above the daily 200. Possible? Very. I just leave it there. We broke below the 50, the daily. That gave us that. We gapped, and that's what gave us this additional power behind. The daily was saying, watch out. On that break, even though we closed above, but when we gapped, it continued. Again, those are the signs via the moving averages. Back down to the hourly, same deal, but we're already lined up. Hourly is already lined up to go down. So if I want to go out to the 4-hour and take a peek at what it's doing, you're seeing how they're all see that. 13 on the 4-hour chart is getting ready to cross the 200. It's going to present a problem. The 20 would be stronger. The 20 is beginning to get a little bit more vertical, as is the 50. So once they all drop below there, we may be reaching the bottom, because on this one, I'm just looking for a minor 4. But we'll see. So we can build that situation where our indicators are start to suggest a bottom, but we're not there yet. Not on the 4-hour chart, not on the daily chart. On the hourly, we just have the signal we should continue. All right, let's go over and take a look at the futures market. A little bit different because, of course, it trades before and after the opening and close of the cash. All right, so here, this has now been broken, so I'm going to take off that trend line. It worked, it was great, but it gave a clean signal. When it breaks, get out of the pool, because that's what's going to happen. Because it was a little bit longer term, and when it breaks, it affects that longer term. I'm going to get rid of that for right now. Okay, so here we have the A, the B, and we're trailing on the C. You can see on the futures basis, we've broken through 0.618, just null, just got rid of it. So I'm going to go in, I'm going to edit, and I'm going to take it and off. No need to keep showing it and present any confusion. It does not exist anymore as support, maybe resistance, but we can always add it back. So what do we have next up? Where wave C would be equal to wave A, and that's at 53.11. Now, we've got important levels at 53.30, I believe it is. I'll check again on Monday morning for any additions that have been put in after, calculating everything from Friday. On whether that level, if broken, could really send a signal to the market that some stronger selling is coming in or should be expected as or actually that one might be a put wall, or at least a gamma collection. Stronger gamma positions are still there. Now that we've broken 54, it does push it down to 53. And that's a level that's got to be important. If it starts to break below 53 with some strength, it opens the door not only for 51.31, which is a fib level, but it opens the door for 5,000, which is long-term major support. That's the big deal about 5,000. So if the S&P along with the Nasdaq both could, together are announced to be in corrections, well, then we can bump it. We could bump it that it's going to be a much stronger correction. But at this point, I'm not necessarily looking for that. They may test it, but I'm not looking for a break right now. I'm looking for that because it's to be seriously large support. So again, the adjustments that would be made at that level would, I don't want to use words, but it would not be good. So I am anticipating right now that it will hold because a lot of the bigger players, that's where they're sitting. And they may not want it. So they've got enough where they can bolster their position. Okay. Over in the S&P, we've got that lineup going. How do I want to count this coming in? Let me go down to the 15-minute within the futures market. You can see it still is not easy to count because that initial was down to there. We did, to get a decent bounce, was all the way 1, 2, and then that's kind of bizarre, which could be another type of a triangle which resulted in a drag down. So maybe it was a diagonal 1, and that was again, difficult to kind of put the brakes on. So that's where I go and I come down to the line chart and I'm going to look. There is 1, 2, 3, 4, 5, but that's too big of a 1. 3 is not the shortest, so it could work. Could be 1, 2. Then this, questionable. But then we start to really fall in recognizable. 3, that's a 3. 1, 2, 3, 4. We got one more. 5. And what is that then? 1, 2, 3, and then we got a 4. So again, the 100%, maybe that's only wave 3. The whole thing that we're really coming down in, 3, 4, and the 5, we need to get it into here. So there are two things. Do we continue to extend? I think that is very likely. So if we come back out here, we extend in the 5th, we extend in the 3rd, and maybe we're still extending now. 1, 2, 3 coming in. This is a 4 and a 5 and a 3. And of what? So we have to be prepared. We have to look at all of that. So when you're trying to really connect Elliott to the fibs to what's going on, take them all in. When we're looking at the possibility, because remember, it's just a technical picture. So if I'm looking at what can the market do, well, then I'm going to be looking at if it crosses this line, if it crosses this support, it opens the door for harder and more extensive selling. The positions that are existing, options-wise, tell you that. So when it gets broken, pay attention. it has the ability then to drop more quickly to the next level. So break here, I think we can easily drop there or possibly drop all the way to here and still be within 1, 2, 3. Right? Then we get then we get a 4 and a 5. So we have our levels. Again, there's the 5,000, major level. But if this is 3, 4, 5, we test it and then rock it. Just a scenario, not saying that that's what's going to happen. All right, so let's look at the moving averages here. We've gone over what we think inside and what we're looking for. Again, I'm going out to the hourly again, and it still has more to do. We've now looked on the inside to give that also, that there's a pretty realistic possibility. Now, just to add, because I spoke about it over when I gave the the NASDAQ. And if you don't listen to the NASDAQ, here's what I talked about. I talked about Intel. I started by going like, what the hell is going on with Intel? That was abysmal. That was just really seriously, holy crap. There's something going on at that company and it's not good. So this picture here that we got when they got up over 50 last year, at the end of last year, it was like, whoa, unable. What's up? The gig seems to be up. And even this market gapped on, I mean, we're just going to just start coming down. I pull it all the way out to here to show if we're running fibs, that's 100%. That's where this would be equal to this down here. Stock got down to almost 20 on Friday. Now, just so for our information, there are 38 ETFs in existence that trade that have Intel in the top 15 holdings of the ETF. Do we think that there's going to be some adjustments being made, that they're going to want to switch Intel or lower its ranking to lessen the blow, but also just to improve what's happening in the overall index or ETF? So adjusting, right? What are we talking about? We're in a minor wave 4. Adjustments are being made as we trade along. That might include 1. Intel and the SMH is 4.5% of the move in SMH is because of Intel. Is that going to get adjusted? Likely. In the SOX, it's 4%. In the XSD, it's 3.25%. Now, granted, these are big moves now in terms of percentage-wise and price-wise. But when we start getting down to where it's like flipping, it's going to kind of be like the SQs. Still money going flipping around all the time, but it's the move itself is like between 720 and 730. So we're talking about the potential the market could drop down to 740. That would be 100%. It's a wild trip on the way down. And trust me, when we're getting down here, it'll be panic selling because we should have pretty solid support between like 13 and 12. We had it here, we had it there, but that was just one. Here we had 1, 2, 3, 4, 5, 6, and then it started to go. So if we can build a bottom and it ends up here, then we have a shot that that's as far as we're going to get, and we'll probably go up because I can add additional levels there in terms of what we can look at. But I'll do that later. Right now, it's like adding them in. You can put in 0.786 and 0.886. Those are also very well-known and used fib levels. All right, that's Intel. What's going on? Not only that, but they gave this abysmal earnings report and then announced that they were laying off 15,000 employees. So here in Northern California, they're a big employer down there in Silicon Valley. So I'm not sure actually the breakdown because they have an international presence. So I'm not even sure how many from where. So, but that's a lot of people. And the reason was to improve profitability possibilities, or to improve profitability. This is a CEO making an announcement. I'm going to fire 15,000 people because I need to become profitable. That was a strong statement. So in the NASDAQ, it's number 20, it's 28th in the weighting chart. And in the S&P, it's 73 out of 500. So it has a pull still. Pull's going to get less because the percentage might remain the same, but the price move itself won't be. So it won't contribute as much, but it's creating damage. And it's the same thing that's happening at Intel happening somewhere else. Lots of questions to be asked. Okay, back in the ES, in the future side, let me come way out of my monthly chart, and I'm going to come down to the daily chart. And the daily chart, again, what we have, I meant to clean this up. Dang it. I will. I'm going to take all of the gold off all the way down because that part is done and I'm fairly satisfied with it. But in the meantime, there is the box for the minor fourth wave to come into. Here, that low is 5,028. And we've already got numbers where it could come down to the 5,000, which should be major support. That's 382. It should be major support for several reasons. Fib, that would be the expectation. It should hold because of other factors that would come in there. And it's adjusting. The market is adjusting. That's what we're seeing here. Amen. It's an adjustment. They're doing it hard, but they're adjusting. Amazon, it was an adjustment. Does that mean that Amazon at 190 is just unthinkable? No, it means we're adjusting. So same thing here. So I think that we have here in the future gotten into the box. Give support that we're going to continue. Here as well, if I drop it down to the hourly chart, it looks like it could be 1-2. Or, we're inside of a 3, which is also 1-2. So again, 1-2, 1-2, and it would suggest we can maybe pop a little bit. But we can do that tomorrow during Globex. And then once we start, we pick up going back down again. All right, moving averages. Here we are, 1 hour on the future. Aligned to go down. Look at the 20. Look at the 20. I mean, it is just running to keep up. And we got the 50 kind of picking up its angle. We got the 200 picking up its angle. Not a pretty picture there. If we go up to the 4 hour, I'm sure it's kind of going to be the same. Yeah, see what happens when you break? Tried to get back above it, broke, went. This one was already spiked, went. Look at that one. That's the shortest. That's the 13. So it's it's really continuing to just suggest we have more to go. All right, I'm going to end it right there. And the next Elliott Wave Daily will be on Monday, August the 5th. Have a great balance to your weekend.